Ladies and gentlemen, welcome back to a very special episode where it's just myself and the great and powerful Tevis from the fundamentals of investing. And that's exactly what we're going to get from him, as he just, over the last week, has been due diligently studying SoFi's Q4 numbers and is ready to tell us what his thoughts are on SoFi's Q4 and 2025 expectations. But let's first find out how he's doing. Tevis, how you doing?
I'd be doing better if you were on time.
No, we already know, and I even let the
All right.
chat know that
Yeah.
Tevis was
You're
late.
freaking asshole. Gaslighting the chat too. This guy doesn't. I'll share our screen and show our X conversation where you admit to being late. All right, don't give me that.
Yeah, I mean, you can only share your screen if I put it up on screen. So
I will take a picture. I'll post it on X so people know.
Yeah, he's gonna show his phone like that.
I can't. I'm recording with my phone.
Oh. Yeah, no, I had a little computer problem, but that's fine. But how are you?
I'm doing well, man.
Saw you midweek for the
For
Tesla
3 hours.
earnings.
For 3 hours.
Yeah, I actually had a great time though. It was a lot of fun.
Mm-hmm.
Did you see? Sorry to start this conversation off with a little bit of Tesla, but did you see the car cleaning thing that they put out today? We knew that they had a patent for this, but now we're really getting to see what their expectations of this is. You get to see this or no?
No.
Oh, you want to take a look real quick?
Sure, yeah. Let's start SoFi Weekly off with some Tesla.
Yeah, baby. I'll keep the music off just to make sure that we don't get.
Oh, didn't they show this off at the actual day?
Yeah, they showed a little bit of this, but take a look at how they get rid of these water bottles.
There's a big vacuum.
Yeah, just vacuum everything. Vacuum people's backpacks, vacuum the water bottles. Clean up this car. Now, to be honest, I don't even know if this is going to come. I kind of don't even believe it. This still feels like concept to me. But
I mean, if they're doing the whole car, the vacuum part is not that hard, man.
No, you're going to have to build out these stations all over, the country. I think like it's going to be a lot for the next step,
Yeah.
Like not everyone's getting a robotic arm to go into their city. I don't know. It just seems like a lot. But all right, now we can talk some. That robot sucks.
Oh, yeah, actually, just before we go into SoFi, how you liking that HIMS, man? Up 40% year over year. You liking that or what?
I'm loving it, man. I'm loving it. HIMS is great.
Yeah. What's Joby up? Is it up 40% year over year?
It might be. Well, year over year doesn't matter to me. I only worry about year to date.
Year to date. That's what I mean.
Is HIMS up 40% year to date?
Yeah.
Jeez.
Joby is up 2% year to date, Tanner. All right. Joby is up 2%. Oh, actually, sorry. HIMS is up 48% year to date.
Maybe it's good to be in the lead this year. Very happy to be the recipient of this. I think I deserve it.
Yeah.
So, and by the way, I don't know why you're taking credit for it. It wasn't your pick.
It would have been my pick if I got the pick first.
All right, well that's fair. Well, I would have received HIMS either way then.
Yeah, you would have gotten HIMS, but you didn't want me to pick your gift anymore after Unity. You were like, nope, you can.
No, it got messed. I said I did want to stay with you, but what's it called? Whenever the fifth person came in, we all just decided to go kind of go in a circle.
Dude, I'm loving him. Like my portfolio is off to a great start in 25 because SoFi's up 20-something% year to date, and then HIMS is up almost 50% year to date. And so those are actually HIMS is now like neck and neck with Tesla for my second largest position. Isn't that wild?
That's crazy.
Yeah, Bitcoin has fallen to fourth. It's now, I'll make a post about this tomorrow, but I have 20% in Tesla, 20% in HIMS. And it's like just the fractions of the percentages that change. And I actually think when I put the call options, that HIMS is definitely going to be number 2. Insane.
Yeah.
Insane.
That's wild, man. That's probably some of the fastest accumulation that you've done, because this is a pick that you probably haven't even been into for a year now, right?
Bro, I bought Hims for the first time in August at $13 a snare. It's at 40 now, almost 37.
Yeah. Yeah, that's awesome. You got to love those picks. What's it called? So, yeah, I'm going to benefit off that. I think they actually had news today, something about Metapause
Yeah,
products that they're getting into, some
it's
patents or
coming in
something.
2025. Yeah, exactly. And testosterone too. So
Hey, Big T.
it's good, man. It takes the spotlight off of GLP-1 somewhat, right? Like you get more product lines.
Yeah. Yeah. Um, but yeah, no, I don't follow them, although I'm a shareholder. And in fact, even like I publish what my portfolio looks like.
Yeah.
And I don't even put hymns on it because I think if people see what the percentage is of $100, then they can kind of multiply it out. So, um, no point in adding that.
Yeah, I mean, look, the only reason I mention Hims is because I saw your text messages with Steven where you're asking him to come on and he's like giving you shit about Joby.
What, Steven?
Yeah.
Did he tell you that?
Yeah, I literally said I saw your text messages with Steven.
Oh
And
my gosh, dude. Yeah, he does it.
Steven's on my back.
I said, I offered him to come on the channel. I said, I'll buy Joby if this gets you on the SoFi Weekly. And he said, nah.
Yeah, exactly.
But I would have coughed up. I would have spent my 100 or 1,000 or whatever he wanted me to buy to get him on. But because I know I'm going to make money regardless. It's Joby. Like
I mean, you're buying it at the same price you would have bought it Jan 1st, so you're pretty much
well, that's not true. It's more expensive now because I waited.
it's up 2% year to date.
Money's money.
An extra $2.
Yeah.
All right, we got a lot to chat about. Let's jump into it.
Let's do it. So SoFi earnings came out Monday. That's crazy to think.
It's been a long week, dude. It's been a long week.
That is crazy. And there's been a lot of news since then. What are your thoughts on SoFi overall? And then we can get into analyst expectations. We can get into the different Galileo aspects, but good quarter, bad quarter.
The quarter itself was great. Like the quarter itself, I think lending beat my expectations. I think financial services, 84% year over year growth is doing great. Technology platform, I mean, they're putting up more notable deals. But just financial services in general. Like I know I made that post or I put that chart up and you responded. The margins are great. The growth rate is fantastic. The operating leverage is amazing. I mean, it's growing 88% and the expenses are growing 26%. Like everything looks good on that front. I thought the call was terrific because they cleared up a lot of outstanding questions from investors. I think, I just released a video earlier today. And I mean, in that video, I was talking a lot about crypto, saying that this is something that the market isn't pricing in because of the Fed Powell's comments on Wednesday as well, and SAB 121 last week. And everything is happening so fast that I think that 2025 will be significantly stronger than what management is telegraphing. Now, I do think that with management talking about going back to growth, that revenue might be more aggressive than EPS in terms of their estimates because they're just going to reinvest a lot of that profit in. I have mixed thoughts, and as I was doing the breakdown for the video that I released on Tuesday, I found myself like getting really annoyed with some of the EPS targets. And then I had to, and I think I told you this on Wednesday, or I think I was on a pod with TJ maybe on Thursday, and I told him that. But I essentially have to take a step back and just reassess, zoom out a little bit, if you will, because this company did what, 15 cents of EPS this year. And next year, they're like, we're going to do 27, let's say 30. They're going to double it. And I'm mad at that because it's not fast enough growth. Like, they're doubling their EPS year over year. For a lot of companies, they would kill to have that level of profitability, And so I do think they're going to do more than 30. I think they're going to actually smoke those numbers. but I'm not like as upset as I was on Monday that they're putting up 25 to 27 cents EPS estimates, because that's almost 100% growth. Like it's very, very healthy growth rates year over year when you look at it from that perspective. But I think by talking about SoFi so consistently on this podcast, that we are a little bit spoiled, I should say, with the amazing numbers that they've put up to date, and with the prospects that they have going forward. And so I do think that, I guess my take that's different now that was on Monday is, I do think 2025 will be a great year. And I don't think management, like on Monday, I was talking a lot about the cognitive dissonance that the SoFi management team has displayed, where on one hand, they'll say 25 is an amazing year, that they're going to have great performance because they have a supportive macro environment that they've never had before. And then on the other hand, they provide conservative guidance. And I don't like that, but I don't think it's as big of a gap now, because the revenue targets are more aggressive than the EPS targets. And it makes sense why, is because it's something that they can control. It's not that, they have no more operating leverage on their business and they can't command any more margins and they're going to have compression and all of a sudden it's going to be a bad year. No, they want to invest more into the business. They now have a 26% tax rate that they want to avoid by growing faster. And so they can control a lot of those factors. And that's where I sort of resorted to, okay, I got to trust management, because they've gotten me to this point and they haven't really led us collectively, all of us watching, they haven't really led us astray. And if the number comes in at 27, if the number comes in at 30 or 35 or 45 and 25, however we want to slice it, I do think that they are doing whatever is best for the business to sustain those growth rates long term.
I think you're right in the idea. So although I agree with you on a lot of what you're saying, I'll play the opposite side here.
Yeah.
I don't think growth rates matter whenever it comes to stock markets. I think what it matters is growth rates versus expectations. So you can have Apple that, potentially beats expectations, and those expectations are low digit, single percent growth rates, and that can raise the stock. And then you can have other companies that are growing at triple digits and they disappoint. Yeah. So the fact that they're doubling on EPS, and by the way, that's doubling on their first year of EPS. So that's kind of like who cares? Look at Nubank. They freaking skyrocketed past double on their first year.
Right.
But it's what the market was expecting. It's not like SoFi has a PE ratio that's lower than the S&P 500. They're much, much higher in valuation. So I think that it is important that they do both. One, hold up a really high growth rate, but then also two, perform better than expectations. If they come in at 27 cents, I promise you I'll be disappointed. You'd be disappointed too.
Absolutely. But this is me not really trusting management's guidance and baking in the fact that it's a sandbag number. And I do agree with you to that extent, to say, okay, well, even if they are reinvesting into their business, like I wish they would just give us more accurate numbers. Like you don't need to beat and raise every single quarter. Yep. You don't need to do it 3 quarters in a row and then on the fourth quarter say, oh, actually we even beat the third, quarter.
Or by the margin that they're the margin that they're beating by is huge.
Yeah.
Okay. Like you look at Visa and MasterCard just both beat and raised their guidance. I get they're much more mature companies, but like they were beating by 1%. There was 1% surprises, 3% surprises. The market still was like, sweet, we love it. SoFi beats their net income guidance by 58% or something this quarter. Like,
yeah,
it's way too much, And now a lot of that is probably stuff that they weren't potentially anticipating.
So I do want to leverage, the rabbit hole that we find ourselves in to get your take on this topic that Chris and I were talking on X earlier this week, and I wish he was here, because how it started was on Tuesday. I posted this this short interest chart on SoFi, which short interest had gone up slightly, and I basically said, hey, look, if management wants to optimize for the stock, one way that they can do that and target short sellers is by not bundling all their good news in one day because the stock saw a 10% uplift on the Fortress news for a $2 billion LPB deal. But then you sort of just dropped Blue Owl on the call. And it's one
Completely.
number in a monsoon of numbers that we got on Monday. And it did nothing to the stock. Like they didn't need to drop it. There's no PR that I can find, that's really on the Blue Owl deal. It's just they sort of casually mentioned it. And I think Chris brought up a great point where he's like, look, he responded and he said basically like management doesn't care about the stock and they showed it this week more than ever before. I don't disagree with that at all.
Yeah.
But I think that, to what you're saying, you don't need to beat by that much. A beat is still a beat, whether it's 1% or whether it's 58%. Like I do think that there's two layers, right? The first layer is, in fact, if management does or does not care about the PSUs, because I think Tim brought up this point where he said, look, if they don't hit the tranches by 2026, they're just going to renegotiate and then make new tranches by 2030. And if it's 2026 or if it's 2027 or if it's 2030, whenever they do hit, they're going to get paid and they're going to make that money. And so they really don't care about, like, they don't have that artificial timeline as much as we think they do. So I don't know if that's true or not. But if that's true and they in fact don't care about the stock, then it's business as usual and they'll do zero catering to market perception. But if they do in fact care about their own performance units, and if they do in fact care about their own timeline to hit those targets, then they should be caring more about the perception around how they release news. They should be more strategic around the news that they release, and they should be providing more coverage so that it's not an unequal playing field between short sellers and longs.
And I also think that it also probably benefits future deals. You get a ton of coverage. I'm sure that helps with other future deals. Okay, wow. Does Morgan Stanley want to deal with this new lender, or do they want to deal with the company that is dealing with Blue Capital, dealing with Fortress, dealing with BlackRock, dealing with all of these other asset managers? They'd be like, all right, well, you know what? That actually lends a lot of like credit without us even needing to do our own due diligence. And we'll do that too. But this is just, an ad that potentially would benefit the company. I think Palantir gets a lot of that. Like they get a lot of, the product is real without them actually needing to show it, because you could just look at the other companies that they're dealing with and be like, okay, well, it must be real.
Yeah, I mean, look, I think deal flow aside, because I mean, they have a great product offering and that'll itself give you the deal flow. It's not like they need to advertise on X or a PR or whatever, or go on CNBC for BlackRock to discover them. Like they have their own connections. I think that's a sort of tangential benefit or a secondary benefit. I think that, and I hate focusing on the stock, Tanner. Like I really hate, and I mentioned this in my video too, like I hate that we talk about the stock, but at the end of the day, management made the stock the sort of target that we're all collectively following, because they could have had their performance units based on revenue. They could have had their performance units based on EPS or any other fundamental business metric, but they had their performance units based on stock. And so now we collectively that are following SoFi as a company have to focus on the stock to figure out if management gets their incentives or not. And I would be super hard pressed to think that as many millions as Anthony Noto has already, that he wouldn't care about $300 million. You know what I'm saying? Like they're literally incentivized to care about this. And we, as a result, are incentivized to talk about it. So yeah. I just think that if all of those statements are true, then we should be, I mean, in theory, seeing more of them artificially inflating the stock, pumping the stock. And I don't mean that in a bad way, because whenever I say pumping the stock, people are like, oh, like it's a shit stock or something. I just mean be strategic about the news that you release. Have a stronger PR department, have a stronger marketing around your product offerings. Like it's very basic stuff.
It was very weird to me hearing the Blue Owl thing, because I think whenever you think of all the other deals, you think, oh, well, maybe they're not allowed to talk about the names or they have something signed there. Like, but if you're going to blab about it on the press release, why didn't you do a slide on it? Why didn't you do a press release on? I was looking up Blue Owl Capital and some of the partners that they have signed with recently, and I'm like, this article that I'm about to show you here got so much press. It was on Bloomberg, it was on Yahoo, it was on their own website, it was on like everywhere, and it was a $2 billion agreement for an 18-month partnership with Upstart. And you're not going to talk up a $5 billion agreement with SoFi over 24 months? Seems crazy. It just, the newer, bigger Upstart is here. Their name is SoFi. They can command a big premium if they start to talk more about that. And to Noto's credit, he absolutely was. The comments about them potentially writing all of their loans through the loan platform business, whoo, like that is the greatest thing that he could have said that quarter.
Like I like that too, man. But like, again, just to play devil's advocate here, and I'm torn to tell you the truth, because on one hand, the more passive that they are from a PR perspective, the more opportunity all of us collectively have to capitalize on that alpha that we know that the market still hasn't realized. But then on the other hand, you know, I want them to succeed and I want them to reach those targets because I personally benefit. It's not like an altruistic desire. Be more freaking aggressive. And I understand you're being more aggressive on the earnings call. That's great, man. But like, there's so many people that are not aware of A, what your business does, and B, they're hella not on the earnings call listening to that. And so it really relies on these secondary information sources, myself, yourself, CNBC, Bloomberg, all of these other sources who got the primary information and are now distributing that out. And it's like, dude, like, why would you leave it in the hands of other people to say good things, bad things, or lukewarm things about you? Like, just get a PR department and start cranking out these releases. Like the Blue Owl Capital deal should have been something that would have pumped the stock normally.
Screamed from rooftops.
SoFi in crypto should have, like that Powell comment, they should have been retweeting that, talking about it. Like they're so freaking passive, and I don't understand. Like it's just, it sort of irritates me to some degree. But then on the other hand, like I put in more orders to buy more stock because I'm like, fuck, if like the market doesn't realize the potential here, then I'll take the free money if you give it to me.
Yeah. No, that there is definitely alpha there if you're talking about, you know, insane pieces of news that are only in earnings calls. Like I wonder what percentage of different like investor resources are actually touching all the investors. Like, so I mean, the headlines that they post, that's probably the biggest one that just gets shared. It's so easy to retweet that stuff all over X, all over Yahoo. Any platform that you use to buy your stocks usually pick up on those, you know, business wire pieces. So those really do get around. And then you probably have the earnings call presentations, then the press release, and then earnings call under that, and then the 10Qs and 10Ks are probably the bottom bit that the least amount of people actually go ahead and read through. But you know,
like, when was that Fortress deal? When did that news come out?
I feel like that was
a month or 2 months,
September, October, something like that.
Yeah. So like, you're telling me that they secured 2 loan platform deals worth $7 billion over the next 2 years?
Crazy.
In the last 3 months?
Yeah, and even more than that. They said they're dealing with.
Somebody commented, Gene commented saying, great deal, but it's already baked into their forecast. Dude, I don't care about the numbers. The numbers are the numbers that they released, and that's fine. Like they're going to do those numbers. I care about the perception of those numbers. Hey, we released this new business line. We got $7 billion in 3 months. Imagine what we can get in another 12 months of deal making.
Yeah, like 100%.
You got to make the market see the vision. And I think that's the thing that I'm urging.
Yep. Fundamentals are a great way of investing, like 100% that I'm a fundamental investor, but you also have to let other people know the qualitative aspects of your business as well. Look at what we're doing going forward. This is how we differentiate. And of course, people can find it, but you don't want to make them hard. Like you don't want to make it hard for them to find those good things, you know? Yeah, the thing that I don't love, and this is some SoFi cult stuff, and you see this from any cult, is that a management team or any team can do zero wrong. Okay. The
Yeah,
fact that they didn't post that is not a part of a grand master plan. I don't care. It's a press release just to say, hey, our business is strong, and you have a fiduciary duty to do that. Like,
dude, we had the biggest discrepancy, and I like B-Dubs bringing it up because this week was the absolute biggest discrepancy of leadership styles, and ironically, they're two of my top 3 stocks because Elon over here missed every single number that you can judge this business by, like missed them all, and the
yeah,
stock went up. Why did the stock go up? Because he was like, we're gonna do 10 trillion in revenue off Optimus, like the most bullish, pumpy stuff ever. And then Noto actually knocked all the numbers out of the park, and the stock fell. And it's like, well, why did the stock fall? Because of stuff that they can control, because they choose to be conservative and they don't choose to pat themselves on the back when they're actually doing some great stuff.
Tevis, can I butt in really quickly?
Yeah.
Hearing my point, hearing your point, that's one good thing. But there's somebody here that's really going to get this stock down to $11 a share. Let's bring in the real bear.
Roy Bear.
11.
How you
Hey,
doing,
guys.
Roy?
Sorry for being late. Glad I'm finally here, though.
Good to see you.
For those usually watching on my channel, thank you for jumping on one of these guys instead. Couldn't make it on time, but at least I'm here.
I like the fresh cut.
Hey, Tevis, cheers,
Hey,
buddy.
there you go.
That's a flavor we don't get
And he's
here.
frozen.
Where's
Just
Tanner?
like
What's
that.
Tanner drinking? Is he drinking like tea or something?
Yeah, I'm drinking water.
Did
Like
I freeze
personality.
us?
Can you not hear us?
I can hear you now.
Okay, gotcha. Well, we said thanks for coming in, and we like your haircut.
Well, thank you.
So
Yes.
what's it called? Just initial reactions of Q4 from you on SoFi.
Yeah, SoFi stock took a haircut, and so did I. So
Yep.
that was kind of the rationale behind that.
You were meeting them.
Yeah, exactly. I mean, it's fair is fair. Second largest position in my portfolio. I mean, we talked about it. I think I'm always going to be called Roy Bear. It was their best earnings call ever. Guidance was not where I thought that they should have guided for. Noto clarified some of the comments. You guys had some good points I caught, probably the last 10 or 12 minutes on the drive, as far as that perspective and couching like those deals and trumpeting them from the rooftops, because a lot of companies do that for things that are just not a big deal at all. $5 billion securitization is a big deal because
Well,
it's demonstrating it's not only about the revenue, which is good.
It's not
but
a
it's
securitization though.
Pardon?
It's not a securitization. They're originating the loans for them on the loan platform business, but
Right.
small technicality.
Wrong term, but it's demonstrating that they have a product that the market demands, and so it's demonstrating that fair value idea is completely bunk. The loan platform is fantastic. Now, tech platform, I think that the AWS of fintech thesis is dead, and that's a narrative that was pumped by Anthony Noto and team. Time will tell. Maybe it'll be resurrected from the dead. It could be, at a certain point in the future. But man, they gave guidance. They usually guide pretty accurately on the tech platform. So that's not too exciting. I do think that they'll continue to do what they do every single quarter with triple beats and stuff. But my comment, which I had too much of a reaction on, and I didn't retract it because I don't do that. But I did say, hey, it was a little bit hyperbolic and reactionary about short interest spiking up, to possibly back to an all-time high. No, but there is still a chance that it spikes up, to about 20% over the next quarter or two. Part of that is macro, but part of it is there's blood in the water now. And it's their own doing. Like the numbers, it frustrates me because it's like PayPal's was, basically a year ago, where they had ridiculously good numbers. And the one number that they could control, guidance, they shot themselves in the leg. And that caused a feeding frenzy for a lot of the bears. So I think SoFi, and I understand why they did it, the way they did it with Noto and everything. It just they are not good at communicating, to the market in a way that really captures that narrative in the way that so many other companies are. And yes, Tevis, I hear you. You're like, I have infinite money because I'm a billionaire and I'll just keep buying the dip. But some of us are not billionaires and we have all the position we want because it's our second largest. It's, like 15% of the portfolio. So it's like, hey, it's go time. Let's go. I still believe that they'll hit that $25 base level target. And I think the base case may be right this year. There is room for the upside, and I think the loan platform provides that. Of course, if there's a large tech deal, that'll provide that too. It doesn't sound likely. And I do think that they'll probably get to 35s at least next year for those performance PSUs. 45s. I've never. There's times I'm like, oh yeah, I think it might happen, and I don't know. I don't know if they have the execution. I don't know if they have the communication. I don't know if they have the right strategy. But I mean, honestly, if we take from here to 35 in a year and a half, I'll take that. That's amazing.
First of all, you are a billionaire because you hold hymns.
That's right.
So don't even give me. Yes, all-time high. And Tanner owns $100 of it, so I guess
I will drink to that.
Yes, sir.
$50 richer in this month.
Anytime I need to buy stock and I'm out of liquidity, I just call up Tevis. Tevis or Steve always have wires to my account. They know that I'll get them back, but I do appreciate that extra liquidity when I need it, Tevis. That's great. There was a couple tech deals during the quarter. I'll read out the quote here. We just signed a large US-based financial services provider that offers short-term consumer loans, card services, check cashing, and other financial products. Okay? They built a large, loyal, and highly active debit card portfolio over the past 2 decades and will now rely on our technology to power existing and new capabilities. 1, exciting, but 2, do you guys have any guesses on who this could possibly be? Because there's a couple things that go on there, like short-term consumer loans, check cashing past 2 decades. This is an older business. What do you guys think that this could be?
I'm not sure.
You think this is like a regional bank or something along these lines, or
it could
US-based financial services provider? So I don't know. If it was a regulated bank, I feel like they'd say it, but I'm interested to find out if we get any more details on that. That might be a lot of fun.
I mean, it doesn't really matter that much until, like, financially speaking, until 2026. So, they're going to hit that. They're either going to hit or they're either going to miss their tranches without those deals.
I'm going to try one more. We signed a partnership with a leading hotel rewards brand for a co-branded debit card program launching in the first half of 25.
Expedia?
I wouldn't think so.
I mean, that would be crazy.
Well, didn't they do their SoFi travel thing as a benefit with Expedia?
Yep.
I don't think that they're really even characterized as a hotel brand anymore. They're a travel brand, but they're a lot more than a hotel. I don't think that they'd refer to Expedia that way. And they would. It would be. They wouldn't tell you that it's Expedia, but it would be talked up a lot more than that little footnote. I did love the color though, like the just perspective on who's actually coming in.
And co-branded debit card program. That makes me think. Like, do you mean co-branded with SoFi?
Sounded like it.
Or are they just going to be running the back end of a co-branded debit card program that's with a larger bank? Very interesting. I'm interested to learn more, and I actually do think that we will find out those names. The tech platform is pretty quiet, but in terms of ways to find the names of those deals, whether that's Galileo that shows it off or some of the absolute crazy fanatics that cover this company, most of them are on this panel right here. Usually we are able to find them. Like, my list of Galileo clients is right around 100 names. I think it's actually at 101 right now. And they say they have about 100 plus Galileo names. I think I have a really good share of like all of them.
Yeah, like, dude, they could partner with, I don't know, Amazon, and I wouldn't really care until we actually saw it in the financials. Like, if they're like, hey, we're partnering with Amazon, we're going to do Amazon co-branded cards, we're going to be their sponsor bank, but we'll see revenue in 10 years. Like, cool. I'll start talking about it in 9 years. You know what I'm saying? Like, it's great. And don't get me wrong, if anybody from SoFi is watching, like, please provide more detail.
There's
I'd love to see all of the detail. That's amazing. But my
Yes.
point is like, the reason we got ourselves in this position in the first place was by getting overly excited about the tech platform at the beginning of 2024. Let's not make that same mistake in 25.
And they're doing a good job of couching expectations. And it's kind of funny because, I mean, they've done that anyway with guidance, but like on tech platform, it's just like, wow, this is not good at all. I do have a question on the tech platform, and maybe you guys were able to puzzle it. Usually there's a seasonal bump in quarter four, simply because of debit card swipes. There's probably other factors too. And we didn't see that this year. So I'm just kind of curious.
On the holiday spend, you mean?
Yeah, exactly. And
Mhm.
it was a good holiday. So I'm just wondering, any hypothesis on that?
No, I guess their actual spend amount is not as much revenue as what they actually get on potentially new account signups, new product developments. Like, who knows? I don't know how the revenue breaks out, but I would have thought that. Well, I mean, even historically speaking, we've never really seen it be seasonal, right? Like PayPal, you can definitely see if I took away the dates, you could tell me which ones are Q4s. You could
Yeah.
not do that with Galileo. In all the periods that we've seen them in. So
Well, I mean, it's there. It's not as pronounced as PayPal. You always do see a bump in quarter four. And let me pull it up. It'll
I
take
could be
just a second.
misremembering. I just don't remember seeing that. I want to bring up this tweet from Scott Henderson, who is a employee at Galileo in the marketing department, that had something very nice to say. Right? And I always like to read into these things probably more than I should. But the reason why I'm still staying very optimistic is due to comments like this. Don't lose sight of the long-term vision. We're just coming out of the fintech winter. Big deals take time. Galileo announced signing 3 new large deals. I'm also looking forward to working with the new chief revenue officer in 2025. Potentially, I am still being too optimistic, but that conversation around fintech winter versus potentially fintech spring has something that's been echoed across the entire industry from multiple different businesses, you know?
Yeah,
So
guys, we're 40 minutes into this stream. I don't think we should waste more time talking about Galileo. Like, it's great, but like, happy to be proven, wrong or right about Galileo when they actually start making some money.
yeah, that makes sense. Show us what you got here, Roy.
So yeah, this is a bit of a bump. Well, at least the last two quarter fours were a bump before a drop off in quarter one. Little bit of seasonality. It's definitely not like PayPal where you don't want to compare quarter four to anything else. And
Yeah, I
this
don't see any
time,
trends. There's Q2s that are skyrocketing here. There's Q3s that are skyrocketing here.
no, quarter four is always. I mean, it's part of its growth too, but quarter four is always just up there a little bit, and it takes a couple of quarters typically to outperform. Now, this is an exception right here, but they landed a lot of acceleration. I don't remember who that was. Slightly before my time, but no, it's there, and it makes sense with the debit card swipes around holiday spend. But yeah, I don't know if there were just fewer swipes that people are really going after those rewards and the cash back. But I don't know. It was weird. I was expecting a little bit of a bump, and so I'm really curious what quarter one hold. And I, by the way, I do want to reiterate what you said, Tevis, with tech platform stuff. Like the additional color as far as like the type of accounts that they're getting, phenomenal. Please keep that going. And if something major happens where you can announce that, you don't need to wait until the next quarter.
Tevis, what would
Yeah,
you like to talk about next? You're very sensitive on the things that we cover on this
dude,
series.
It's been a big week, man. We've had a lot of stuff, and we're talking about the tech platform. Like, we can talk about the tech platform on a slow week.
No, go ahead.
We got don't do that. Don't switch me around. My brain's gonna hurt all stream long. Okay, so can I play the Powell clip for you guys and then get your guys' thoughts on it?
Yeah, please do.
Okay. Great. Yeah, because I think that's a more relevant conversation for us to be having, because I think that's where the real alpha is going to be had when this regulation does come through. So let me just play this for you guys, and then I'll get everybody's thoughts.
Oops, sorry.
Bitcoin really is to
Can you guys hear?
our role with Bitcoin
It's quiet, but yeah.
to look at with crypto really is to look at the banks, and we think it's banks are perfectly able to serve crypto customers as long as they understand and can manage the risks, and it's safe and sound. As a good number of our banks that we regulate and supervise do that. The threshold has been a little higher for banks engaging in.
Thoughts?
2 years,
he's wrong. Go ahead, Tanner.
2 years?
It's going to take a while. Not 2 years. I never said 2 years.
I mean, I don't think it's going to be in Q1 either.
Looks like they changed their mind pretty quickly.
It's going to be one to 2 years, just like I'd said. Powell is just looking from his perspective as Fed chair. But even from the Fed's perspective, they're one of actually 4 different agencies that needs to provide clarification and revision on some of the guidelines and regulation. And it doesn't happen overnight. So there's a reason why Anthony Noto, there's a reason why Schwab, and there's a reason why others that are interested in this are not saying, hey, we're going to do this like next week. They can't. They have to wait. And it's the burden of it's a shameful way to do it. But I believe it was Basel III in the Prudential something crypto. I can't remember what the document is called, that basically put the onus on banks themselves to prove that they are able to meet the standards that are issued. And so it's not you can't do a situation like Robinhood or Meta or tech companies will do, where they're just like, hey, let's go for this, and if it doesn't work out and we get slapped by a little bit of fine, that's fine. Banks cannot operate that way. They cannot. And so it's going to be slower than you expect, Tanner. I'm sorry to say that.
Hey, that's all right.
Look, I'll sort of meet you guys in the middle by saying absolutely it's going to take longer, but this is as fast as you could have ever hoped for it to go. Guys, keep in mind, this is week 2 of the new administration. This is the end of week 2. What do we get? End of week 1, we got SAB 121. End of week 2, we got Powell now giving this commentary. Like, how much faster do you possibly want this to go? It's the best case scenario from a regulatory body perspective.
Clip it.
I'm just saying.
Yeah, and Doug B asked this. He said, seemed like it was turned off overnight. Can't it be turned back on quickly? Robinhood could trade it. Absolutely, but Robinhood does not have a banking license. That's the issue, is because of the banking license and because of regulation that was very specific for banks, the banks were hindered. That's a reason why. It's not that SoFi is bad at tech or hates crypto all of a sudden or is overly cautious. With crypto, that is not the issue. Go back to comments that Anthony Noto made about cryptocurrency back in 2021 and 2022. He's as excited and bullish on crypto as Vlad Tenev.
Yeah, he's loved crypto forever.
So this is not them being slow. This is not them being inefficient. This is not them handling tech bad. As Noto said, they're going to be as aggressive as anybody. Now, if you see a lot of different banks getting in the crypto game and SoFi doing nothing, I'll say, well, I was wrong. But I think there's a 99.99% chance that SoFi will be the first bank to launch something as soon as that runway is made clear.
And one other thing to add is that, yes, it was a big fork in the road, whether they do the chartered bank path or the crypto path, i.e. the Robinhood path. But now that we're going into a situation where you're having further deregulation in the banking space and you have regulators and the administration as a whole that's more favorable, it's going to be much, much harder in 25 and 26 for Robin to ever get a banking charter if they wanted to than it is for SoFi to get into crypto. So they're going to have their cake and to eat it too.
Yeah, Robinhood doesn't want a banking chart anyway, but your point is right.
Any bank, any fintech out there to get a charter.
Now, the other thing on crypto too, there were more tokens trading on SoFi Invest on their crypto platform when that was shut down than Robinhood has now in the United States. This is not a company that's like, like PayPal. PayPal has like 4 or 5 cryptos that they trade, and it's just kind of a, well, if you want to have it, it's fine. It's not, the stable coin is exciting for PayPal, but it's not their main thing. No, this was a substantial part of the Invest platform, and it'll take time to rescale, but they have a lot more users right now. And as long as people are still interested in crypto, I think crypto winter will come at some point this year. I may be wrong. But this absolutely can reaccelerate the Invest platform to the point where in a couple of years' time, like it's humming along nicely, that we're not talking about it dragging on SoFi as a business. We're talking about how awesome it is, at least on the crypto side. They have some work to do on the other side.
Yeah. Any other topics aside from crypto that you guys want to cover? Things that happened in Q4?
Do we want to talk about tariffs, macro, price action?
You guys don't want to talk about the quarter, right? All right.
I mean, I was just going to say the Analyst price target changes because we had a ton of them. But yeah, we can talk about Q4 stuff that happened. But like, I feel like a lot of that is old news. Like, I'd rather talk about going forward guidance, 25.
Sure. I have all the price targets here if we want to go through them.
Sure. Let's do that.
So we could start with Big Dan, but why don't we go to the start here, which was Jeffrey Adelson. $13 price target, kept it flat, no changes, $16, perfectly fine, whatever.
And sorry, as Tanner goes through this list, I just want you guys to see the correlation between the price target and the rating of the analyst. Sorry, go ahead, Tanner.
No, that is not. I honestly don't believe the ratings at all. They're so short term. They don't actually tell a good sign of who the analysts even are. Timothy Switzer, $8. Anyway, Kyle Peterson, $13 up to 20. Here, Timothy here went from $10.50 to $14. We got an $8.50 to $9.50, $16 to $20. There's not a whole lot of downgrades. So there still is a massive disconnect between, is this a bank? Is this a fintech? And then the number one person that has the highest price target, Andrew Jeffrey here doesn't actually show a real number, but he actually placed it somewhere between $26 and $35, yet it doesn't actually show up. But I've read the report.
It's too high. It can't be counted on that.
Yeah, I don't think they actually on any of their stocks do real price targets, so they're all flat. But the new sort of high consensus is $20. Multiple analysts now. It's not one stick out analyst. What are your thoughts there? Is there something changing this quarter? Are they sort of wrapping their heads around the loan platform business?
The loan platform business is a business that they can understand. Like tech platform is, and it has been, and it's partly SoFi's fault, a black box. And loan platform is like, oh, you have all these deals, you're selling all these loans. We get that. So I think that's a lot easier for them to price in than the tech platform.
Yeah, let me just share my screen, actually. Yeah, 10 to 11 is the one we care about. So this chart is from Fintel, and it just shows all the analyst price targets. Can you guys tell where the stock is going from this range? You have from 20, it's either going somewhere between $20 and $5, according to analysts. Like that is the playground over the next 12 months for the stock.
11.
Yeah, exactly. Roy's keeping it, he's keeping it safe with 11 right through the middle. But my point is like, I made this post a couple of days ago. I said, analysts have no idea where the stock is going, right? Because their price targets vary so drastically from one to the other. Now you could argue that, hey, this is only brought down by a few like David Cavarini's of the world. But at the end of the day, like there is no clear consensus on where SoFi is going because the highest price target on the street is Dan Dolev. I mean, if you want to count the Andrew, what is his name? Andrew Williams, Andrew Jeffries. Like, if you want to count him too, sure, but you also have people who are saying $8, $7. They have no idea.
$5.
$5, yeah.
I think what's his name? Giuliano Bologna raised his price target from $4 to $6. I wonder what changed his mind to give it such a 50% increase.
Yeah, it's a huge raise.
You know,
Well, one day he will have an $11 price target, and I will be very happy. Of course, SoFi will be $35 then, but you know,
you should have seen how bullish he was. Like, I read the report; he's so bullish, and then like he expects crazy originations, huge tech platform growth, 20+%. You know, margin expansion every year for tech platform, financial services, and lending. And then he goes, but we priced this off of tangible book, and we think it's going to be 1.2 times 2026 tangible book.
it's so weird. I mean, he's more bullish on the tech platform than SoFi is.
Yeah.
Bro,
Than us, than any of us. He's the most bullish. If he was here, he'd be like pounding the table, AWS of fintech and $6. I was like, what are you, just for the tech platform? Is that what you're pricing?
it's so ironic too, because like most analysts who have under a $10 price target don't even know what the tech platform is or does or accounting for it at all. And he's like, this is a tech company, $6.
Yeah.
Look, I've said it before, and I will say it again on the stream. My price target is $28.50 by the end of 2025, and that will mark a new all-time high for SoFi.
When can we get you to buy Robinhood?
Man, there's some things that my ego just won't allow, and
That's not one of them.
it won't allow me to buy Robinhood at 52 after I said no to Roy at 14. Like, it'll crush my soul. Probably make me money, but crush my soul. You can't catch all of them. I'll let you guys have Robinhood, and I hope you enjoy the gains.
You know what's funny is sometimes there are companies that will go up, like they'll triple from where they're at, and people will not buy. Like, I totally get what you're saying. But then there's other stocks that will 10x, 20x, and then fall a little bit. And people will be like, oh, this is my entry point for NVIDIA or Tesla. It's like, you didn't want to buy it 3x, and then you think you're getting a deal 10x from there? Like, I don't think 50 is the standing point. I think it's much higher. But yeah,
I think
anyway.
it's much higher too. I'm just saying that, like, by me buying at 52, it's essentially me calling myself stupid at 14. And I might have been stupid at 14, but I'll never publicly admit that.
No, here's the thing. I had to stomach buying at 17 whenever Amit and Roy and all these guys were telling me to buy at 7.
Right.
You know, like I was the guy with cake on his face, but I'm not anymore because I'm freaking tripling my money.
And Hims is that for me. You know, it fell, and Tevis was pounding the table at like 13, and he's like, you should buy all you can. And he was right. I just wasn't ready for that. And so at 17, I bought him. Like, well, I'm late. And then, you know, I added 30% more, something like that, when it was at 27, you know, like 2 weeks ago. So, yeah, no, like sometimes just because a stock falls or rises in price doesn't mean that it's a bad investment or a good investment. Like, that's one of the things that, you know, if you're new in the market, definitely look at where stocks have traded in the past. And I'm sure somebody, you know, like Amazon is a classic example. Somebody could be looking at Amazon and be like, oh man, you know, the equivalent of it split, but the equivalent of like $50 a share is like, oh, you know, I kind of missed my entry. It's too late. And look at where it is now. NVIDIA, you mentioned it. Hims, Robinhood. If it's a excellent company, there is a price to pay that's too much. Like Palantir right now, amazing company. I wouldn't buy a single share of it right now, guys. I would not. I sold some, you know, at, what was it, $70? It's risen a bunch. I'm not upset. I'm like, you know, I still have, it's my largest position by far, but there's a price that's too much. But, you know, quality companies that are executing, that are leaders in their industry and space, those tend to reward your portfolio if you buy it, even if it's run up 10, 20, 30% from when you recognize that, oh, this might be a time to get in.
Roy, let me ask you this. If I said, hey, Roy, you're my friend and I trust you, and I have $1,000 and I'll put that all in one of these 4 stocks, SoFi at 1650, Robinhood at 52, Palantir at 84, or HIMS at 37. Which one would you tell me to put it in today?
HIMS.
That's what I'm doing. I'm buying SoFi, I'm buying HIMS.
Yeah.
I was,
Hood would be number 2.
Hood would be number 2, really? Over SoFi at 16?
Oh, yeah.
You know what's so funny is I was talking with my audience during one of my live streams, and they were talking about, or I was talking about buying the dip on NVIDIA, not the day of the DeepSeek news, but the day after Tesla, Meta, and Microsoft said that, things are still as planned. This is just cherry on top. So I rebought. And I was like, well, I just have a lot of conviction over this or for new money than a lot of other positions. And someone said, well, what do you think is going to happen first? Like NVIDIA at 9 trillion or, SoFi at 60 billion? And I truly do not know. But that's the funny thing, right? It's like if the growth rate matches, then where it is now doesn't affect where it can go.
No. You said it at the beginning of the stream. It's not growth rate. It's growth rate relative to expectations. And NVIDIA's are sky high.
No, they're not. No, they're bottomed out right now.
Okay.
Like the company is so cheap right now, it's ridiculous. But this type of mindset is what is making this a buying opportunity, is because everyone thinks that it's expensive because it ran up. Look at their growth in EPS. It has skyrocketed. A company that goes from $10 to $100 can still be cheap if their earnings had done more than 10x. So NVIDIA is really cheap right now. It's why Steve, the value investor, is buying a ton of NVIDIA. But
somebody called you exit liquidity.
I mean, yeah, it is funny, right? Like I've been a shareholder of NVIDIA for a while, which is really weird to add on to it because even just a couple shares just can change your average price. But that's what I believe in the most. I think betting on a more technological future than today is an easy buy.
Well, that's one of those things too, that it's hard to break out of the mindset, especially if you've been in a bear market for a while, of like looking at that price average. But in a bull market, if it's a quality company, with a few exceptions, that price is going to go up over time. And you're rewarded if you buy that, if you think it's a good value. So like case in point, Palantir, I didn't buy more Palantir, but when it fell to $20, I sold cash secured puts, and then it just went off to the races. Those never filled. It would have raised my dollar cost average by quite a bit, especially if I was looking at net average, which is like $6, $7. But that would have been the right decision if I just bought that instead of cash secured puts.
That question that I brought up to you, Roy, I just made it a poll in my chat. And so we'll see how big of a SoFi echo chamber this is, because the question is, would you rather buy SoFi at 16, HIMS at 37, Hood at 52, or Palantir at 84? And currently 82% of people say SoFi at 16. Go figure.
But this is for you, not somebody else. If this was somebody that doesn't have any stocks at all, my answer might be a little bit different. But I know how much SoFi you have by waiting. Like, it's massive.
So
I think it's a lot more now.
It's and I have cash secured puts too for ends of month at 17.
And I as bullish as I am on SoFi, is like, that's just too much risk, especially with the blood in the water that SoFi did for themselves. And I'm like, I would like you to diversify into another phenomenal quality company. Now, is Robinhood undervalued? I don't think so. Is it fair valued? Maybe a little bit above fair value at this point. But I know it's a phenomenal company and you have a long-term perspective that's going to do very, very well for you. And over this year, I would guess SoFi is going to outperform Robinhood by a fair bit. I might be wrong, like so far I'm wrong. But over 5 years, over 10 years, I'd put my money on Robinhood. And I know you're a long-term investor. If there's somebody else who's like has a 3-year mindset or doesn't have any stocks at all, SoFi is a better value right now for that kind of perspective.
You actually missed the first part of this chat, Roy, because you were driving or whatever. But I was telling Tanner that after the run up in HIMS, it's now close to, like, at par with Tesla to be my second largest position, 20%.
Yeah, I'll have to look to see when it'll overtake SoFi for me. It's tough because HIMS is all shares for me. Zero. Well, I've sold some covered calls. I had to roll those. But
I was just thinking, what's the point? HIMS is the company of options.
I mean, like it has so much volatility. I don't need, unless there is, by the way, Tanner, if anyone else is saying about HIMS, this is not HIMS Weekly. There will be at some point, and nobody knows when this is going to happen. They're going to end compounding on semaglutide. They make a lot of revenue off of that. It's a known thing. It's not the bear case or anything, but this stock is, if you think SoFi it has a lot of short interest, HIMS has 30% short interest. And look at the price action. But at some point, a headline will come out that says, hey, semaglutide is being removed from the shortage list. And HIMS is going to drop 20, 25, 30%. Could be wrong. Would love to be surprised. If that happens, depending on where the price lands, I'm going to be buying some leaps. It's a great opportunity. But so if anyone else is looking for entry, HIMS is that stock that will give you entries. SoFi also gives you entries multiple times.
Yeah, I have leaps on both. And
DGen.
Yeah. If you don't want to be long and hard, short HIMS. Someone said that, Tevis, whenever you leaned to the left, that it looked like I just got wider. Can we try that really quick?
lean to the left, like
Can
this.
you complete my shoulder here with your shirt?
Oh, there you go.
You have to remove your head and make me bigger. Thank you. Sorry, I needed that. I needed that.
That's amazing.
There we go. All right.
What is this podcast?
Just a bunch of adults, eh?
Thank God.
Okay. What else can we talk about, or should we go into the after hours? Because I feel like I started talking about big tech. Now I want to talk about big tech and other stocks.
Yeah, let's go into the after hours. Tanner, how can people find the after hours if they don't know?
I don't know. Ladies and gentlemen, thank you all so much for... I'm kidding. If you go down just right below where the subscribe button is, on the left of that subscribe button, there's a join button. It costs money. So that was Tevis's idea. Ladies and gentlemen, thank you all so much for watching. Really do appreciate your time.
Buy HIMS for now.
Hey, there you go.